foreign stocks making a comeback. So there's two different, when it comes to investing in the stock market, remember there's U.S. stocks, there's foreign stocks, and the U.S. has been just killing it for years and years and years and years and years, right? So here's the S&P 500. Sometimes what I like to do with this is a chart overlay. So I'm going to go to stockcharts.com. I'm going to go to stockcharts.com, and let me show you how I would overlay these. Okay. Oh, Mark, you know what? You're right. I forgot volatility. We could definitely say something about volatility as well. Yeah, I'll lump that in here in a minute. It doesn't have me logged in. Do I have my login? Yes, I remembered it. Okay, so I want. Okay, I'm going to put the S&P in here. We're going to look at a weekly chart. I'm going to go back, I don't know, 5 years. So we're going to look at a chart of the S&P, and then behind in that gray area chart, we're going to look at emerging markets, EEM. Okay. All right, emerging markets in gray. Okay, Brazil, Russia, India, China, some of the other countries that are not as developed. Take a look at 2013 to 2016. Here you have the S&P just going up, 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 up. Meanwhile, emerging markets are flat, 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 and then down a lot. So you have this stark contrast between what U.S. stocks are doing and what the rest of the world is doing, primarily emerging markets. Okay. So for people that had a diversified portfolio and had investments in U.S. stocks and investments in foreign stocks, 2013, 14, 15, it's like, why do I own foreign stocks? They're not doing anything for me. They're underperforming. Well, since 2016, they've really started to play catch up, especially this year, if you look at the magnitude of the rise there. So look at the gray area chart and how it's gone up quite a bit faster. Maybe not quite a bit faster, but it's gone up more than the S&P. So one of the themes this year is emerging markets finally played ball. So this has helped me because I tend to do bullish types of trades in EEM, like covered calls and naked puts. And it's been not near as fun as U.S. stocks because, here's emerging markets from 2010 to 2016. They were going down while U.S. stocks were going up, 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 up. So finally, emerging markets have their day in the sun here. So if you look at the weekly chart, very strong uptrend in emerging markets pretty much all year long. The way that you determine the year-to-date gain is you just take a look at the current price, 46.11. You subtract the opening price of the year, well, really the closing price of last year. So we closed last year at 35.01. So 46.11 minus 35.01 divided by 35.01. 32%. So emerging markets up 32%, in 1 year. I don't know the last time we had a 32% gain in emerging markets. We haven't had a 32% gain in the S&P, even though we had a good year. It wasn't 32%, right? So the S&P was 267.58 is where we're at now. We started the beginning of the year at 223.53. So we've had a $44 gain. Divide that by where we started. We're up almost 20%, right? So emerging markets up 30%, right? S&P up 20%. We finally have a year where emerging markets beat U.S. stocks. And typically that's what happens, right? That's why people get diversified because certain areas of the market will lead and lead and lead, outperform, but eventually those underperformers will come back, and you'll see the leaders pause and take a breather while the laggards kind of pick up the slack. So really saw a lot of strength out of emerging markets this year, right? What strategy would you use for EEM? Asks Serena. Well, it's a $46 ETF. Right now, it's in an uptrend. It's actually been going sideways for a couple of months. So any type of strategy you use on a $46 stock that's neutral to mildly bullish. We teach covered calls. We teach naked puts. Covered calls and naked puts are kind of the two cash flow strategies that I think would best match it. Okay. There's more aggressive ones. Bull call would just be more aggressive. The thing with the naked put and the covered call is they make money when you go sideways, the higher probability. But that's what I've been using. Okay. So you might say, well, that would have been nice had I known this at the beginning of the year. Well, look, you can't always pick which asset class is going to be the best every single year, right? But how about just keeping an eye on it? How about the takeaway of this discussion right here being that one of the reasons why we don't just look at U.S. stocks is because there's other areas we can trade. And sometimes when U.S. isn't doing well, emerging markets are doing well and vice versa. And so I didn't know this year was going to be a banner year for emerging markets. I've had to sit through a couple of crap years in emerging markets. But because I stayed the course and because I kept it on my radar and tried to trade it, I was there to participate when it had a good up year, right? Now, what I'll be very surprised with is if we get another 30% up year next year. I mean, usually outliers like this year are followed by a return to maybe something a little more modest, but that's how you determine or see that there was outperformance.